afternoon, everyone, and welcome to Stock Market Today. You have Alyssa Corum and Ed Carson here to break down the action today. Who would have thought that the NASDAQ would close down just fractionally today, outpacing what we saw for the Dow, the S&P 500, and Russell. We'll get to all that. And Ed, we're also going to talk about three compelling setups in a whipsaw day.
Yeah, Ali, it's a very, very wild session. Marine Max and Trex have slipped below buy points, but there's still reasons to be interested in them. Meanwhile, Goldman Sachs is just above a buy point.
All right. So we'll analyze those stocks, but first look at the major indexes. The NASDAQ finishing down just 0.1% for the day. The Russell 2000 down less than 0.5%. The S&P 500 down 0.9%, and the Dow, the hardest hit, down 1.4% for the day. So this was looking very ugly here, especially for the NASDAQ earlier on in the session. But to see it really come almost all the way back is a pretty...
Yeah, it is a positive action here. You have the NASDAQ. I mean, it was starting to look like a vertical violation when you have this, really strong, heavy, almost vertical decline over several days. Coming back, that was really a relief. Obviously it matters. What we have to see is, will the NASDAQ continue to rebound from these lows, or is it just going to start resuming selling? Because if it does that, then, the intraday rebound, people will quickly forget that. It was a strange session because not only for that, but the sectors that were moving, we had story stocks rebound, story growth stocks, but also mining stocks did well. Then you had housing weak. So it was like, we had sector rotation, but even which sectors were rising and falling, it didn't seem to follow the usual pattern. It was difficult to get a handle on.
Yes, difficult is right. Let's also check in on the Dow, S&P, and Russell. So the Dow closing down about 1.4% for the day, but only coming down to its 10 and 21-day moving averages.
That looks just fine. I mean, a testing right there, you wouldn't think much of it from that.
And talk to us about the action for the S&P below its 21-day line in a relatively meaningful way for the first time in quite a while.
Yeah, it did. And looks like it closed just below that, which isn't great, but it came off of lows. It closed at session highs. So, I mean, this would be fine as a test. It's just, we'll just have to see. I mean, honestly, we just have to see going forward, because right now this is just a couple percentage points off all-time highs.
Exactly. So this week could be very telling about overall conditions, if we're able to bounce back from this, or if the selling really rolls over. Here's the Russell 2000 intraday undercutting its lows from a couple weeks ago, but closing up near the highs of the day as well.
Just we're just have to see, but it's still below the 50-day line. I think just in general, you have to investors have to think, well, do I want to be? I mean, there are potentially some things we're going to look at some, but do you want to be adding exposure at all? I mean, in this kind of market, because it's sort of like this. If you have a picnic, do you really want to go out on a picnic if there's a 50% chance of rain? I mean, there's a 50% chance everything will be great. It'll be a wonderful day, but do you really want to do that? I mean, investing, if you're putting in real money, how exposed do you want to be if the odds aren't really in your favor? We're in a confirmed uptrend, but the recent action has been choppy, and you throw in all the sector rotation, it's hard to say that the odds are in your favor. It's not out of favor like a bear market or a correction, but it's not in your favor either.
Yeah, that's a very good point. And now let's take a look at some stocks. First up, Marine Max, ticker HZO, closed at the bottom of its range yesterday, slipping today back below a buy point, down 6% in above average volume. But what do you think about Marine Max here, Ed? That relative strength line is holding close to highs.
That's one of the reasons why I wanted to look at this one. I mean, yeah, the reversal from yesterday and today's fall, not great, but the relative strength line, which tracks the stock's performance versus the S&P 500, still no record highs. At one point yesterday, it was probably flashing last couple of days, flashing a blue dot special, kind of blue dots marking when a stock is in a base or breaking out, and that's really a bullish sign. The growth is tremendous. Look at that acceleration we're seeing on the earnings and the sales. I mean, some of that might be off of losses, but it's like really strong growth. So those are all very positive. Not the greatest thing to see, but if the stock can come back above the buy point, if it does that, then I think that investors could take a look at it. Wouldn't buy it right now because of that kind of reversal, but this has a lot of positive attributes.
Okay, and Trex is another name that we've been talking about quite a bit as of late. And it has, like, we're on the other side of earnings season at this point. So it has earnings out of the way, and it was able to close off the lows, finding support at its 21-day line.
Yeah, and the growth slowed down, but it beat views. The general backdrop of it makes, sort of fake wood decking and related kind of or fencing products. They last long, they're expensive, but with lumber prices skyrocketing, it probably has pretty good pricing power for them. The stock is not far from a buy point, though investors might want to treat that recent couple of weeks as, yeah, there was just a tiny little kind of handle, though. I mean, it was probably too short, but this new thing is sort of a high handle. And if it can get above that, I also would say that housing related stocks and lumber stocks, they sold off pretty hard today. So Trex acting like it did wasn't so bad. I mean, there was some, it held up relatively well given the sector it's in.
All right, well, let's check in on Goldman Sachs, ticker GS, falling about 2.4% today, slightly above average volume to the downside for a second session in a row, but it is holding within the buy zone from this cut base here, and Goldman definitely a leader this year.
Yeah, and one of the things I like about this is because treasury yields probably won't make too much of a difference for this company. I mean, they're investment banking where a lot of banks aren't. I'm not saying that it won't have any impact, but it's just less of a factor. It's just nice to get that kind of issue out of the way. It's holding in a buy zone. The RS line and is close to highs or multi-year highs. You can look at the numbers, the growth, obviously with easier comparisons, the growth is pretty strong. So, if this is one to be looking at. Again, I'd caution people about really trying to step up exposure. They might actually think about getting out a little bit more. So, I mean, investors should always be looking at buying opportunities, even if they don't pull the trigger.
Yeah, that's a good point. We love looking at those stocks with the relative strength lines holding up. We're not trying to buy ARKK right now, Ed.
Yeah.
Why is that?
ARKK was one of the leaders today, but it's still below its 200-day line. And it's just like those stocks are out of favor. The thing is why people get so excited about these stocks is some of those stocks are up 5, 10, 15, 20% today, but you just don't know. I mean, they also sell off that hard as well. And so you want the things to be in your favor. Those speculative story stocks generally are not in favor. And you just want to be looking for stocks that have been in an uptrend, and those just aren't.
My internet is not doing me any favors right now here at the end of the show, but thanks for tuning in, and we'll see you back here tomorrow.